Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
What about gold? Great question. What about gold? We're very much gold agnostics. We can see the case for gold here longer term on some of just the debt background of all the Western countries. But if you look at the long-term charts, gold and the U.S. dollar on a long-term basis have tended to have an inverse move. If we're right on the dollar, on a world that more normalizes and interest rates across the board tend to rise, we think gold is in trouble because gold competes on an interest rate standpoint. When interest rates are very, very low, you don't really care about losing the yield from not getting paid in gold. If that changes and the world normalizes, two things happen. The yield starts to change and makes gold look less attractive. The world normalizes, the risk premium goes out of the world and gold looks less attractive. And if the world reserve currency, which is the U.S. dollar, starts to increase and which gold is priced in, the relative value of gold, the relative price of gold will tend to fall against other commodities. So that's our view long-term on gold. Short-term, we think gold can continue to rally even if the U.S. dollar rallies on risk. And we saw this during the credit crunch. Both the U.S. dollar and gold moved the same way for a few months in the midst of that credit crunch in a very, very strong way. So near term, if you look at the charts, it looks like gold goes higher here in near term. But I tell you, we're not. We have enough trouble with the currencies, but that's our general, view. I guess you could say on gold. I wish I could provide better information than that. Thoughts on broad buckets ETF? I'll take one more question here, and I think I got to be going. Thoughts on CEW, emerging market currencies from Wisdom Tree, is a question. We like that a lot because we think the emerging market currencies, if you have a long-term perspective, what's going on in the world, even if we have these risk events in China and other places, what we are seeing, and we don't think this will change, we're seeing a risk of wealth just transferring to the emerging market currencies for a lot of very good reasons. Number one, the relative growth is higher, and number two, they don't have the relative debt to GDP ratios. They don't have the government deficits. They have relatively more free market economies in some of these places. The tax provisions are probably better than most of the Western countries now, which tend to be doing the best they can to drive capital out of their countries. And we think because of the credit crunch and because of the continued wave of long-term deleveraging from the private sector, we think you're going to see undercapacity growth in the industrialized world, U.S. obviously, Japan being the outlier, and Europe even worse compared to the emerging markets. That relative growth difference will tend to pull more money out of the industrialized world to the emerging markets for yield and growth. So we think it's a natural process unless something in a very, very big way happens in China to derail what's going on. And not that can't happen. We're not saying that cannot happen, but assuming that very worst case scenario, we think the emerging markets move is for real, and that's why long term we really do like that CEW emerging market basket. Question: do you have knowledge on Forex leverage regarding FIFO? I don't think I do, and if I did, it sounds more like an accounting question, and I probably wouldn't feel comfortable answering it. Sorry. Here's the question here. I'm sorry I missed this. Will Portugal get by with a bailout? I'm not sure what get by means. Well, we think that the weight of all these countries is going to change the game. We don't think there's going to be enough money for all these bailouts, and this is why the IMF was called into this situation. we really do see the possibility of these countries coming out of the European Monetary Union, as odd as that sounds. But it's a good thing for us, because then we can trade the French franc and the Dutch guilder and the, and the German mark like we used to years ago, he says, a bit tongue-in-cheek. But yeah, we really have to see what happens to this Greece model here. But Spain really is the next major one in trouble, because their housing market is huge. That's getting crushed. It's a much bigger economy. So the problems are massive. It's hard to see how this plays out. With the Greek bailout enough to refinance this summer, we definitely think that if this money is delivered as they said, and the IMF gets involved in the situation with Greece, it could carry them through the year, and we could see a bounce in the euro on a belief that these problems have been solved. Kind of a relief rally in the euro is one of the things we're concerned about because of this. But ultimately, when we look at the numbers and we look at the debt to GDP and we look at the near-term funding need of all these countries collectively, and we see the pressure on Germany and the rising discontent within each of these countries as austerity gets pressed on them more and more, we think ultimately this is a problem that they cannot handle. So yes, we do think it's possible they get through this year, but ultimately we think Greece is going to default at some point. And I think that's it, Lynette. Thank you, everybody. I appreciate your time and really great questions. Lynette, thank you, and the ISE for allowing me to make the presentation today.
And thank you, Jack, on behalf of everyone who was able to join us this afternoon and the ISE. This was very thoughtful and insightful topic. And if you'd like to listen to Jack's webinar, it's going to be available in our archived recordings at www.fxoptions.com/events. So look for the email with the link tomorrow morning. And Jack is going to be coming back in a few weeks, so just definitely join us then. And next week we have Rogi Horner discussing trading FX profits for maximum profit. And so if you have any questions, feel free to send us an email at ask@fxoptions.com, or you can also, any questions that you have for Jack or for the ISE regarding FX options. So thanks again, and have a nice evening.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.